All right, guys, what's going on, everybody? Welcome aboard to our weekly market recap. My name is Carlos Garcia, founder and CEO of Gar Capital. Glad to be with you each and every weekend, going over the markets, how we did, what we can improve on, kind of prepare us for the next week. Never ends, right? That's kind of the deal. 2024, so far, so good. We're going to go over it together. Glad to be with you. Let's go ahead and get started. So, first things first, welcome to the bull market that everyone's been talking about. Now, technically speaking, we are above all-time highs. I was only 19 days past my prediction of all-time highs by the end of the year of 2023. So close to greatness, but that's all right. The idea is that everyone was on the same page. We knew where we were going. So all-time highs are here. That's great news. Now what? Now what do we do with it, right? That's kind of the very specific billion-dollar question. What do we do after all-time highs? Well, the problem with all-time highs, guys, is that you don't know where the ceiling is. Technically speaking, there is no ceiling until there is one, until there's a sell-off. So that's something that we need to discuss together this today about what are the next steps moving forward. Are we in overbought territory? Are we getting into mania? Look at the last couple of weeks. I think we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about 14 out of 15 weeks green. And again, that's great. Very, very happy to see that. But we need to prepare ourselves for the incoming correction, which I do believe is coming. I know I don't want to be that guy that the world is ending, and I don't want to be a party pooper. It's eventual. Again, it's just more of the, kind of a pullback from overbought conditions, overbought levels. Again, you can be overbought for longer, obviously. So we really have two options. We either ride this train, which is fine, or we can play the reversals. That's kind of the deal. And we're going to go over that here in a second. So, first things first, what I want to do is bring up our Discord channel. So, we're going to go to largest here, largest screen, excuse me. So, we're going to go ahead and put our results for the week in options trading. Let me go and bring this up. Here we go. And we'll go over each trade together. How's that? All right. DraftKings, the first trade that we had for the week, we were 5 out of 6, 83% win loss. I really wanted the perfection. Amazon was the only one that hurt us this week, unfortunately. But we'll go ahead and get started line by line, and we'll see what we could have done better. What did we do wrong? Always improving. So DraftKings, we got in on the 4th of January, the March 15th, 34 calls. We got in at $2.99. We closed out at 20%. Again, that's just me being careful. Possible double top on the 1 hour. I'm going to show you guys that here in a second. And then we also had, we hit as high as 80% on this trade as I was tracking with the runner. So with that being said, let's go first to the hourly. Kind of want to do that first. Here's the double top I was fearing. And then we got a gap up on Thursday. So this is kind of the damned if you do, damned if you don't sort of thing. And I really want to emphasize this point. Let me go and get this going. I really want to emphasize this point, guys. It is very difficult to find the perfect exit. Very difficult, especially when you're managing risk for so many members on the server. And again, my number one priority is to make things easy for you, where you guys don't have to stress. You're outsourcing the stress, guys, to us. That's what you're paying for. We're telling you where we're going, where to fish. You go ahead and get in. Fair. We track it for you. We do the analysis. We'll take the accountability. If we get it right, you win. And if we get it wrong, well, we just got to get better. That's kind of it. But again, managing expectations and managing risk is probably the most important part of this business. And again, we did have time. It's not like, oh yeah, we're about to expire. No, could have held it for longer, but this is why we have runners. We got as high as 38%. But again, being cautious. That double top was forming, could have got back down to 32. It's just unnecessary risk. We could have just, what we did, I think, was the best thing. Obviously, a full position here. I think some of our members probably held, broke out. Not much you can do there. As a runner, again, that hit as high as 80%. Remember, this is for March. So again, the moves that I was seeing on that double top is that the volume was drying up on these calls. They weren't even above 1,000. And when we got in, I think they were above 10,000. So it looked like that we were just running out of gas. And that's fair. Looking at DraftKings here, again, running out of gas here at the 1 hour. Possible double top forming. Again, it was looking at it, but it did held It did hold that kind of 34.45 support, got a gap up, and then Friday she went, but again, underperformed the NASDAQ, underperformed the broader market. And this is a high beta. So again, we're going to keep an eye on DraftKings moving forward. But again, that was a great trade. It had a very negligible drawdown, I think of about 17%. If I can take a look at this drawdown data, I write it all down. DraftKings, the biggest drawdown on this was 19% on the trade. So wasn't that difficult of a hold watching that. So again, if you're holding in, great. And if not, well, that's fine. We can look for another opportunity. Let's go to Amazon being next, the only loser of the week. We got in on Amazon. Let me go and see. This was a Thursday, January 11th. So last Thursday. This is when we got in. We got in on this false breakout, basically. And you can see we tagged 157.17. The target was to get to 160. That was the target for calls, but we have a gap to fill 163.24. Another stock that underperformed the NASDAQ on Friday. So looking at it, generally speaking, at this time, even the next Friday, the next day, it was still outperforming the NASDAQ. So again, so far, so good. Monday, we didn't have a market. Obviously, the market was closed. And then Tuesday, we kept sinking. We sank all the way down to the bottom on Wednesday. But at that point, the drawdown, the damage was done. On Tuesday at the open, I think we were down around 85%. So really didn't even get a chance to really kind of salvage anything. The most important thing at this point was to see what could we have gotten with a bounce. And we did. We got a V-shaped bounce. We're basically at the same levels or where we closed on Friday when the market was closed around 4 o'clock. This is all after hours action. All it did was a round trip back to where we kind of got started around 155.17, 156 area. Unfortunately, it just didn't pan out for us. This was just pure chop, and we had to eat that one. The good news for Amazon is that the trade is still viable for more upside. We may have just been a little early. So again, if we can get above 158.14 team, I think that's kind of the level we're looking for to finally go for that gap fill at 163. So again, I think we're just a little early. We are setting up for a cup and handle as we had one here. We broke out, which was setting up, and then it kind of got a smaller cup and handle, which is kind of funny. Or you could do inverse head and shoulders. That's what we were looking for. We didn't get that. We kind of held again around that right shoulder, and then we should get a little more upside on Amazon. Again, it has been underperforming most of the NASDAQ the last couple of days. So Amazon did not work out for us, unfortunately, but we keep it moving. That's the deal. AMD got in on Jan 16. This was a Tuesday. And these guys, I think this got as high as 207%. You can see that hit in the money. These were the 155 calls for Jan 19. God knows where they closed up at the end of Friday because I didn't track it after that. The stock is now at 175.89, new all-time highs. We've talked about this with Investment Club as well. We did a swing trade on it. I'll show you here in a second. Jan 19, 155 calls. That was filled on a Tuesday on the 16th. $2 was the entry, $3.60 the exit, 80%. We got more than just the usual 40%, and that's something that we've been kind of really putting our focus on. That if we can get that momentum, kind of a slow melt up, that gives us an opportunity to squeeze as much juice as possible in a full position. Basically, AMD counts as two regular positions in terms of what we usually get. 40% leave a runner. But again, I wish I could have held it for a little longer. That's kind of the deal, manage risk versus kind of hold for the bags. That's kind of what we're always kind of weighing ourselves that way. But 207% is nothing to sneeze at. And again, that's just the last time I checked. Granted, this is $20 deep in the money. So Lord knows where that went because I didn't have it. I closed it at 207%. I was just happy to get that. But hey, what can you do? That thing absolutely went bananas on Friday. And you could see here, again, that 80% kind of counts as two for the 40, but again, it's still full position. DraftKings, again, that was only 20. So it's kind of half of what we do. Kind of offsets a little bit. But at the end of the day, every trade is live. We kind of have to just go by the data that we have and see what we can do moving forward. And at that point, 80% wasn't bad at all to do. I'm glad we got the W. The idea is just to squeeze as much as I can, especially with kind of the market that we have now. This rise that we had on Friday that looks like a complete short squeeze. There's still trillions of dollars sitting in money market accounts. Stocks are all-time highs. NASDAQ, S&P, I think the Dow is near that as well. So good feelings aside, the idea is that we still have to trade this tape, and it's not going to get easier the higher we go, unfortunately. So next one we have here is, oh, we didn't do the AMD's analysis. I mean, I don't know much more I could say about the AMD analysis. This thing absolutely went bonkers. We got in again. That was on the 16th. That was on a Tuesday. So you can see on Tuesday got that big pop. Went aside on Wednesday, not an easy hold. Wednesday, big pop, reverse Thursday in the morning, and then we just continued to go higher. That's just pure short squeeze. Again, all-time highs. We go to studies. We can go to, yep, RSIs. And again, guys, you're in an 80.33 RSI. The highest that we've had on record, or at least the past 2 years, was around 82, 87. And that lines up right here to this top on May 26th. And then we pulled back rather violently. We went from, let's see, from that range of 130.68 on the next day. I'm going to zoom into here. This is the high of this RSI. The next day, we ended at 127.17, got as low as 123.14. The day after that, we got to 118.05. So you're talking about a big move of around $12 just in 2 sessions in terms of range. So again, that's just the last time we had an RSI this high. I fully believe that we are due for a pullback. And again, it's not, the world's ending or anything. I'm not hoping for that. I'm just hoping, again, as a trader, looking for imbalances in the market. And right now we're pretty imbalanced on AMD as the RSI indicates, relative strength indicator. And if you go to the weekly, same deal. You can see it's above a 77 on the weekly. Again, pure breakout. What I would prefer to see is that we pull back that 10 bucks at 164 and use that as support moving forward. To me, that's a more technical sound and something that can be sustained over time. I mean, Microsoft is one thing, but AMD trading at almost 1300. I want to repeat that, 1300 PE. That's price to earnings multiple. That means you're paying $1,300. Let me go and move this and show you guys. This is Finviz. Oh, excuse me, 1374. $1,300, 1374 per dollar earned. Listen, AMD shareholders, you know the drill. I'm all about it. We've been talking about AMD forever. I'm going to show you something that we wrote about it on Investment Club. But at the end of the day, guys, things can get overheated, and that's okay. But 1,374 per dollar earned. That's now we're getting into manias, and they don't end well, guys. This thing doesn't end well. At least short term. We're not saying that AMD is going to go to zero. Absolutely not. What I'm saying is that, again, you're going to get a breather one way or another. There's going to be some kind of excuse. And if not, these earnings better be spectacular. That's all I'm saying, because holy, we're pricing in nearly perfection. A perfection in demand, a perfection in actual manufacturing of these chips. Again, I've been saying it over and over since last year, in 2023 when we did their video, that semiconductors are the new oil. The oil industry in the 19th century and the 20th century. So that's kind of where we are. It's a boom. It's a boom, and that's all right. But doesn't mean you have to pay. You have to buy, being so expensive. That's kind of the point I'm trying to make. So AMD to me is just a little overdone, and that's okay. It should cool off very soon. The last time we hit an RSI that high, or we just continue to go to 200 in this week, and then what happens then? What's the RSI then? 110? Come on. I mean, we know the drill. Again, I'm all about markets going higher. You know me, stay bullish all day. But at the end of the day, we got to call it for what it is. All right, next one was Apple. This is the January 26, 185 calls. So AMD in that trade was a momentum trade. Just want to really reiterate that point. Let's go ahead and look at Apple. Apple, we filled, let's see one more time. The 16th, so that's a Tuesday. We filled the 185 call. So here's the Tuesday. We dipped on the RSI. And I also talked about this with Investment Club as well, about a bounce play. Kind of held that kind of 78.6 fib support of 182.34. And then we got the jump that we wanted. We filled this 1 hour gap as which we expected. That was 185. It got as high as 191.86. Excellent, excellent. This went as high. Oh, I didn't write the runners there. It got as high, I believe, as 100. Let me see. I put it in the trophy room. Here you go. Where's the Apple? Here we go. 100%. These are the 26 190 calls. So there you go. I had a couple of runners still. I'm still holding that. I'll probably get out of that first thing this week. Kind of clean up the runners here and there. But again, a great trade. Again, deep got in the money as well. And again, that was really a reversal play because you could see the downward trend. All we're trying to play is the bounce. More than likely, the best momentum side of this trade would have been continuing down. So going with puts. So with that being said, guys, you kind of have to kind of break down these trades in terms of two strategies: momentum and reversals. So again, this Apple trade was considered a counter move or a reversal. We played the gap to fill here and it continued to go higher. So again, if you held runners, good. But if we go to take a look at the daily now, we are not overbought on Apple. So we can definitely have more upside. Maybe we get to that 195 level. I put ahead and put an alert there to see if we break above that. We'll see where we get from there. But that's looking my next resistance right around 194.70. We could always target the 195s if we get above maybe 192, 192 and a quarter. So let's go ahead and add that alert. And remember, Apple does have some catching up to do, mind you. Again, 56.90. Again, this one was taking a hit because of that Apple Watch stuff. So again, kind of a counter move trend. That's what we're looking for, that bounce, and we caught it. Well done. Boeing, January 17th. We entered that trade. That was on a Wednesday, Jan 26th for this week's expiry, the 210s. We got 53% hit as high as 80. I think we got a little more than that. Yeah, we got as high as 100%. So 100%. I apologize for not updating that spreadsheet. Back to it. Okay, so here we are. We hit in the money as well. And again, this one's a funny one. You want to talk about reversal trades? This is one of them. Why do I say that? Well, didn't we get the news that a freaking door popped off in regards to their in flight? And then you also had the cargo plane, which was a 747 flying over Miami, and that thing broke apart. It was on fire. I mean, just think of every single bad news you can think of. And you're probably saying to yourself, why the hell would Gar send a call here on Boeing of all things? This thing is going down. What, I don't understand. And again, I really want to reiterate this point, guys. It's not as simple as looking at it as, oh, we're only going to play momentum. Only we're going to play reversals. Again, the market is living and breathing. When you're looking at live data, you have to make these decisions rather quickly. You have to understand what you're trying to do. And again, we're not trying to invest in Boeing, long term in this strategy. We're looking to just capture an imbalance between the market. And for Boeing, it was the imbalance of too fast going down. And remember, look at this 1 hour chart. And again, we always look at the 1 hour chart. We know, but we played calls. This is not how you do things, Carlos. What do you mean? Calls, and when it's downward, the 210 calls, 53%, got as high as 100%. We still have this gap fill, guys. Very similar to Apple. We got both. Those are, again, reversal trades. Reversal trades. Very, very important that you understand the difference of both. When it comes to reversal trades, they're going to be harder of a hold. And when it comes to momentum, you're going to kind of get what you want rather quickly as long as momentum holds. But the reversals, man, if you kind of want those high payouts or high returns, let's just say, reversals are the way to go. And again, not easy. Not easy, but we did get Boeing. Again, nice hold of that support of 197.80, kind of dodging all the bad news. This was a hard hold. Everyone knows in the group, and I understand. Boeing got to as low as minus 51%. Granted, we got in on a Wednesday, and then it started chopping around. So again, that was in Wednesday the 17th, and you could see kind of chopping away. We were hoping and see if we get that gap fill, and then Thursday we got what we wanted. And then Friday it continued, and you had the gap here at 216.13. We never filled that gap, team. Not yet, anyway. So we're still watching Boeing. Again, filled in the 1 hour, but not the daily. So if we bring up the daily on Boeing, do we have a little more room to go? If we fill that gap, we'll see. But I'm going to move it to about 220. Let's see, 220 here. And again, you're not overbought or anything like that. This would be a counter rally. Going to be tough sledding to catch this again, because after 220, you got 231 as the 50. Again, the trend is still lower longer term. So catching this one was nice, but again, we're going to have to be extremely patient moving forward looking at this stock, okay? So I'm glad we got it, but this one's going to be a tough one. And then we're going to go to, or that one was a tough one. I don't want to kind of send that again. Any kind of reversals of this nature. And why am I saying that? Because we got another reversal trade open. I'm going to show you guys here in a second. Apple, January 26th, January 18th was the fill. That was on a Thursday. The 190 calls hitting the money as high as 125%. So well done on Apple. These are the 190 calls. So let's look at it one more time. So we did trade this again, and we got to 190. And that was an easy hold. We got as high as 50%. From my update, we actually got as 125. I think this one was this one over here. I must have put the wrong one, but no, I have the highs as 50%. But again, maybe it is 125. Yeah, it did hit in the money. Excuse me. Okay, so this is the right area. My apologies. I just did not fill the notes and runners for the 185 calls. Those are deep in the money. I just didn't track those. But the 190s, yes, they did rather well. They got 100%. And you could see it here on the premium signals, but I didn't hold the other. So 50% gain on that one. Again, that was an easy hold. That was more momentum trade, kind of mixed with a counter rally in terms of it's still a downward trend, but we went ahead and went for it. So that was a great setup. Apple was a great one this week. Absolutely. So we're going to make sure to keep an eye on it as we go along because it's been such a boom for us. So again, that's where we are. 5 out of 6. Well done. We got one trade open. Let's go and talk about that here a second. AMD, I know. And I want to pivot here for a second. Take a look at our investment club. And I talked about AMD with the team. Let's see. I wrote this on the 18th. I go, AMD is trading at a price to earnings multiple of 1282. Right. Granted, this is higher now. That's extremely rich and absurd. Earnings better be spectacular. I love AMD long term, but if you want to take profit, go for it, guys. It's starting to get very frothy. We more than hit our target from our August swing at 113, now trading at 162. This is $13 ago. That's a gain of 43%. Again, I don't know if anyone closed it. I did not. Again, I'm a long-term holder. I don't even look at it anymore. AMD bouncing off the 100 DMA here. Again, this was sent August 14th. And at this point, again, this was a tough hold, but we bounced off that 100-day. And again, AMD is a great company. Nothing against it. Just want to show everyone that I am bullish on semiconductors. I don't want anyone to think otherwise. But again, 113 above the 20 DMA. We traded AMD for a 30% gain today. That was an options trade we did in August. So again, that was one of our top 10 stocks of 2023. In August, we just talked about it. Got as high as 175, more than what everyone wanted. So like I said, semiconductors are the new oil. Great trading there for Investment Club. Investment Club, I'm going to be completely honest, team. It's kind of boring when it's all-time highs, right? You know, all-time highs in your portfolio. I mean, what more do you want to see? I mean, unless you're cashing out and you're going to go spend it, more likely you don't care. Retirement's not, you know, bull markets are great and all, but all-time highs, that's kind of like, well, now what? And again, you don't have to do anything. If you've been owning stocks, if you bought at the top in 2021, November, you're back to break even at worst, which is nice. So again, some people may say, hey, I'm kind of done with this. Stocks are not for me. And I held for 2 years and I'm finally back to where I want to be without dividends. Fair. But again, if you've bought stocks in 2022, you're doing pretty well. If you bought stocks in 2023, you're doing pretty well because you caught the bounce. So really is not much to do when everything is at its most expensive price. That's what it means by the S&P at all-time highs. And really the only reason I say that is because we don't have the earnings to justify it yet. Just got to make sure that, hey, you know, okay, I'll give you the price, but this better be a great car. You know, I'm at the dealership and I say, all right, you know, the MSRP is a little up from last year, but it's a great car. Let's see if it's really that good, you know, other than buying the car online, for example, and not taking a test drive and kind of seeing if it's for you. Same thing with the stock market. You just kind of have to figure it out as we go along. Do we want to buy here at the most expensive price possible? Probably not. So looking at AMD, again, love the stock. Really want to reiterate that point. Again, you're at a 79 RSI just on the 1 hour, and we soared after hours. I do have the 160 puts. I know, woof. So you could see here, 80 on an RSI on a daily. Talked about how RSI is important. 77.09. And I want to reiterate one more point regarding the RSI. Let's go to Investment Club. Where is this set up? I'm going to scroll a little bit more. Where was I saying here? Have the Apple set up here. Give me 1 second, team. Here we go. This was on the 5th of January. I said Apple RSI below 30. We are officially at oversold conditions. Last time we were here, October 26th, the stock was at 166. We went to 199.62 soon after for a 19.8% move. I like this swing trade here, or just an outright buy of Apple stock. Sometimes we get a little overdone on the downside. Prefer to see the next earnings report too, but this seems like a good place to get a discount. So let's see where we are. That was on the 5th, beginning of the year. So target buy right around 180. The TP is at 200. I think right now on Apple, we closed at 191. So we went from 180 to 191, or 182 from 191. It's a game about 10 bucks, 11 bucks. Nothing to get too excited for, but it's a nice setup there to target 200. Again, we're about $5 away. Let me go back down here. So you're about a 6.2% gain. Throw in the 195, just around 10%. Again, once it gets to 200, I'm not saying you have to sell it or anything like that, but again, it's just a nice dip buy is really it. And I see the same going to happen for AMD. And again, all I expect us is to retest the breakout we just had. The question is when. Again, how extended can we be? That's really the question. So I did buy the 160 puts for this week, yes. And you could see on that Friday, we had this nice pullback below the 20. And that's kind of where we were looking at for continuation. This 1 hour candle looked like a reversal candle to me. This is a reversal trade. And then the OPEX absolute ignition short squeeze went. So that's the nature of the beast. You're gonna have to just be patient with me. This is what happens in regards to reversal trades. And that's what we're looking for. Let's see if we get this pullback. You know, there really isn't any resistance, guys. Again, like I talked about, Boeing was a reversal trade on January 9th. Same thing. We did the Tesla trade. That was the puts that we had. So again, it's not like this is the first time we've done this, Apple as well. So we're just going to have to take a little bit of time on this one. I hope we catch it, obviously, but let's see what happens on Monday open. All right, team. But it is overbought, and I think we're probably just a little early. And that's okay. You know, let me go ahead and change this. And again, a little early. That's the point I want to make. Doesn't mean, well, it means you're wrong if we're just too early. But again, if you are early, we're just still going to keep an eye on this thing. The idea is it is going to pull back. The question is when and by how much. The last time we were at this point, just like I pointed out with Apple, when we did that dip buy on that below 30 RSI, that looked like it was going to continue to knife all the way down to that 200-day moving average. Same thing with AMD. Looking at the screen, you almost have to expand it this much to see how high it's gone. Guys, these are parabolic moves. This provides opportunities. Start putting your bear hats on, team, because things are about to change, at least short term. Everything just got a little overheated. That's totally fine. I think the market is trying to price in basically perfection, and I think that provides us an opportunity to scalp or make any money that we can moving forward. All right, team. So that's the week that we had. Very, very well. Very, very strong. I want to go ahead and show you guys as well. Here is the year. I mean, well, month to date is the year because we're in January. 12 out of 13. Obviously, AMD is still open. That one little red line, that's what stands out at me. And that's just us have to get better. But the expectations are going higher. And when you expect more of yourself, even if you don't get to that level, you're going to just improve. So again, yes, that tough Amazon one, I cannot undo that. But we keep moving forward and we keep getting what we're getting. We're going to stick to the analysis. And just for the time being, what I'm going to do is label the actual option trades as either momentum or reversal. Reversal. Example, Boeing, the 210 calls, the market was going, the stock was going down. We played a bounce. The Apple 185 calls, again, tough one to hold as well. That was moving to the side, and that was falling as well with bad news. Tesla, 225 puts. Now, that one was more momentum. So, again, I just want to give everyone that heads up because I thought that was a reversal. It wasn't. It was, that was actually just riding the momentum. So, those two that stand out are Apple and Boeing. And again, not easy holds. We understand that. But I'm going to make sure to label them. So, if you're someone that says, well, I just want to ride the wave, then we'll just do momentum. You just fill those if that's what you want. And reversal trades, again, those are higher payouts. Those are the reversals. Again, cheap options, cheap calls, cheap puts, what have you. Again, we'll find what we got to find. again, at the end of the day, it's not going to change the count. Again, it's more of a labeling, so it sets up your expectations moving forward, which is something that I'm trying to get better at for everyone. So let's go over now the upcoming week. All right, here it is, earnings season. Now we're rocking and rolling. Now we're going to prove that this market can handle what it's handling currently in terms of the valuations. So here we go. We got United Airlines after the close on Monday. We have traded UAL, so I can't say that I don't care because I do. Verizon, I don't trade. 3M, I don't trade. GE, I don't either. Again, we want stocks with high options volume. AT&T, we did a trade on that. Well, it was actually an investment club trade, so I'll keep an eye on that. This is a swing. Netflix on Tuesday. So Netflix kind of sets up the tone for tech. If you guys have been trading for a couple of years now, everyone knows Netflix is kind of the first of the FANG back in the day. Now it's the Magnificent Seven. But Netflix, again, it's all about the subs. We know the drill. Tesla will be important on Wednesday. IBM has been on fire with AI. ServiceNow, Sands. We'll see Las Vegas Sands. How's the Macau situation? We'll see how people are still spending money. Are they still gambling in Vegas? That's kind of important. That's discretionary. American Airlines on Thursday. Maybe United Airlines gives us a little bit of hint of what's to come. We also have Alaska Airlines. We know what happened with them and the Boeing 737. Southwest Airlines as well. We have Intel, which is a semiconductor on Thursday. Visa after the bell on Thursday. After the bell, yep. And Friday will be American Express. So, very important stuff moving forward. Let's go over the big ones. Let's go over the ones that are the most important, right? The ones that we actually, really, really care about. For example, Netflix. Is Netflix anywhere where we want to touch? No, no. And the only reason I say that is because it's just expensive. $504 a share is the highs. In order to trade this, I'd have to go ahead and actually wait for that break and then play 550 to 600 with time. So not the best setup, at least for now. At least it's not overbought. And you can see on the 1 hour, it is Chop City. So I think it's best to just wait this one out and see what we get. Now, in terms of what happens afterwards, well, we can place our alert for afterwards. And if it does break, fine. But we are below the 20-day. So this might be setting up, guys, for a pullback, possibly to around 450. Are we around any kind of heavy support where we may not be able to break out? 61.8 fib, I guess. I want to make sure that lines up correctly. Yep, 61.8 fib there, kind of holding that. Do we have a gap to fill that we haven't filled? We have a gap here at 505.79. So maybe that's our resistance moving forward. If we can fill that, that's great. But looking at it here, I do think we pulled back, guys. So again, puts are very cheap right now. The saying with insurance, guys, buy insurance when you can, not when you have to, or not when you need it. That's kind of the deal. And again, I don't know the books of Netflix in terms of what they're expecting, but I can see that the chart obviously is bullish. It's not like it's not. But you could see we do have a gap to fill at 356. I don't think that we're going to get there after earnings. Again, that's the October lows. But man, what a big pop. Look what we got to RSI. We pulled back a little bit. Now we're hovering around 53. That's fair on the daily. 505.80, if that breaks that gap fill, fine. If we pull back, my first target would be that if we break the 50, 472.11. Netflix puts would probably be cheaper, obviously, after the earnings. So we can always just react to the earnings rather than predict, which I think is always the best move. Tesla, I still think 180 is on its way. The problem is that we're way oversold. We're at 29. The last time we got to this level, we bounced. So possibly we're setting up for a bounce on Tesla. I would say that the 200-day moving average of 231.63, that's your real resistance moving forward. The question is the Tesla earnings on Wednesday, what are they going to give us? Is Elon just going to say, you know what, let's just give all the bad news now, see how low the stock goes? I don't know if he thinks that way, but kind of, keep the guidance down. The stock is already down, kind of keep the guidance very, very light. Don't try to be too optimistic because a lot of bad news is priced in, and then that can cause a bounce as well if things go well. Again, it just depends on the reaction of what the market's looking at. I mean, we say one day we want deliveries, the next day we want more commercial sales like Hertz, and then now Hertz is selling their cars cheaper, the Tesla cars cheaper. So it's back and forth. Are the gigafactories important? Is unionization important? Who knows? Pick an excuse. Really, the price action tells all. I do see 193.34 coming, but again, I'm not going to trade an option on that. We traded options on Tesla already. Again, we're just going to wait for that 200-day as our resistance, or if not, we're going to get to the 180 zone, which we want to go ahead and buy shares there. If anything, here isn't a bad place because you are oversold that much. So we are setting up for a bounce on Tesla, and everyone's pretty much over it, I guess, at this point, trading wise. 218.58 is your 200-week moving average. Now, we don't stay there. We don't stay below that for very long. Maybe about a month in May, but for the most part, we don't stay below that 200-day rather long. So, maybe we got a month where we kind of get to around that 194 area. Right now, guys, what we're looking for is a great price to buy the dip on Tesla. Everyone hates it, fair, but a lot of bad stuff is baked into it too. And that's where we are for the week upcoming. Let's go ahead and do UAL rather quickly. Not the best setup, even though we did trade it. We never got that gap fill. We're below the 50. We're below the 100. We're below the 20. Not the best. So again, best bet is to just wait this one out. Not even trade that. AAL did soar though earlier on the day on Friday. And again, that pulled back. It's below the 20. Starting to see some of the cracks of some possible selling in terms of Friday. I know we got a short squeeze, but some of the momentum names that were up did pull back. For example, AAL and UAL. They did very well on Thursday. As you can see with this big candle there. So that's where we are for the week. I think we have economic data. Let's go over it. Economic data, we have Richmond Manufacturing Index on Tuesday. Wednesday, we have Flash Services PMI, Manufacturing PMI. We have GDP on, on Thursday, 8:30. Let me take a look and see what the expectation is. 2.2% for quarter over quarter. Unemployment claims, again, still strong, guys. The labor market's still very strong. Below 200,000 is the expectation at 199. New home sales, the expectation is 646,000. The last reading was 590,000. Core PCE index, month over month, the expectation is 0.2%. The last one was 0.1%. Again, we had a very strong PPI. That kind of helped. CPI was rather not much of a mover. Pending home sales, 1.6% is the expectation for Friday's number. Rather quiet. I'm just going to be honest here. In terms of economic data, we're also at a Fed blackout period where they're not going to speak. So again, that's kind of where we are in the market, kind of seeing, does this levitation go even further? That's what we're looking for. So let's go and finish up this video with the watch list. Let's go a couple of names that I'm watching this week. First one I'm going to go ahead and look at is DraftKings. We're going to go to the daily chart on this one. And really what we're looking for is a breakout of the highs. Why? Because February, seasonally speaking, since DraftKings became public, it has a 100% hit rate, seasonally speaking. February is always strong for DraftKings. We know what the NFL playoffs and the Super Bowl, what that means. I like DraftKings. So let's see if we get that break above 39.35. We do have a gap to fill at the lower end at 35.95, the 50-day. I would prefer that we tag that. And the reason I put that alert is to buy it there. I think we can get to around 35.95. At worst, we'll get to 35, which is the 20. I think we're getting that consolidation. We'll get a pullback, and we'll see if we can buy that. One more here, or another one here. Let's go take a look at Apple above 188.17. We traded it twice last week. Excuse me, below 188.17. That's the 20-day. If we get some kind of pullback, there's a gap to fill at 183. We can maybe look at the 185 puts or around that area. And we're not overbought or anything like that. Again, right now it's above the 50. You can use that as support moving forward for anybody who's trading calls. Get above 192.25. Maybe we can play the 195s. I think Apple has some juice. The question is up or down. So we'll let the market decide and tell us what to do next. Amazon, I know. Hate to be that guy, but I still like it. And I think we were just a little early. So 158.14. If we break that, we have a gap to fill 163.65. So we're going to take a look at that if we get that break. If not, we leave it alone. And Palantir, let's see if we can zoom in here a little bit. There we go. Above 17.15, we can target the 18 calls, or we can wait above 18 to target 19 to 20. I like above 17.15 because that's above the 100-day moving average as well. Look at a consolidation here. Still downward trend, but again, it could be a breakout of this trend line that we're building here. We may get a shot to get to 20 to 21 in the near future. Did have a nice day on Friday. Not overbought or anything like that, so nothing to worry about there. But you are hitting your head on the 20-day moving average. We need to break that, team. Got to break that if we want more upside. And then last but not least, one of the 2023 darlings, Mara. Good old Bitcoin. Okay. Nice bounce off support here at 1575, right around the 15 level as well. We do have a 50-day moving average there at 1720. Two alerts there, and I don't know why. So let me go ahead and set this up in the hourly. Okay, so I have two alerts. Let's cancel one of these. We don't need two. All right, so we're going to put this alert here. Replace that. All right, 1832. Yeah, I had it around 1828. So 1832 is fine. That breaks the highs of just the past week. Kind of the sell the news rally in terms of sell the news event with that Bitcoin ETF. We know still got that 1712 level as your 50-day. 1832 clears above that, and then we could target 20. So you have one or two options. We can wait for that 50-day to break, or we can wait to clear it. So that's kind of in between scenario. To be completely honest, even if we did break the 50-day, what will we get into? The 18s? That's only 75 cents away. I think that kind of takes away any kind of real momentum there. We may just kind of pull back and try to chop around there. So I'd rather wait for the clearance of 1832, and then we can target the 20s, if anything, or the 19s if we want to be conservative on Mara. So really what I expect us is to get to around the 27 area on Mara, but we still got a little bit of trekking to go. So the question is, does Bitcoin do a turnaround? Maybe the dollar falls a little more, stocks will go higher. Bitcoin will probably be a good measurement of a risk proxy moving forward, and seeing if if the market is still in that good mood, or they're going to take profits on Monday. Who knows? We just have to wait and see. All-time highs, guys. Not much more we can say than we've already said. The question is, how long does a train last? So again, we're just going to go ahead and do it step by step, block by block, day at a time. We'll see what we get moving forward, guys. That's really all we can do. Again, I know kind of looking at AMD, we're like, man, going for calls, going for puts when the market is soaring, tough. And I get that. Just got to be patient with us. I think things are going to go our way this week. Absolutely. And again, if it doesn't, guys, with AMD, we can make that back. That's completely fine. I know I do have this perfection expectation, and I just want to be the best for y'all. Want the team to do the best for you guys. And again, life is just easier when you guys just get every trade. That's kind of what I want. Every single one. So we did have a streak end, 14 in a row, fortunately. Amazon ended that trade streak, but our all-time best ever was 21. I think we get there in 2024. So we started off right. Great so far, and all we can do is all we can do. We just have to wait and see. So let's make it a great, great week. I know it will be, and I'll catch you guys for the Futures Open, and we will see you then, guys. Make sure to subscribe to our channel if you haven't already. I know I've been talking all this time, but again, really would appreciate you guys getting us that subscriber bump. We're trying to get to 10K. Really would appreciate that. Have a great rest of your weekend. I will see you guys on the morning notes, bright and early, on Monday at 9 a.m. Eastern Standard Time. See you guys then. Cheers.